Good morning, everyone. Welcome to the Beginners Online Trading webinar. My name is Danny and I will give you the webinar today. So to begin with, we will have a nice introduction to the company, what we have here in our facility. We're going to look at some things we have here to the left, and we'll also understand just the basic logic behind certain decisions, buy, sell, and so on. The second part will be more practical in terms of learning the basic fundamentals to trade. We will go more into depths, understanding logic behind decisions of placing a pending order and certain calculations that we have here. And it's all going to be very practical for you to use and implement in your strategy. And the last part, the third part, as a bonus, as you guys know, is only if time will allow us. So maybe we can have, in a nutshell, just a taste of how to do analysis. Okay. And it's important to know that any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or suggestion. Furthermore, I would like to tell you guys that the webinar is recorded. Therefore, a very frequent question that we get is if you can get access to the recording of the webinar. And I can safely say, guys, that this is not the only webinar that you can find in our YouTube channel, but the rest of the webinars as well, which gives you the ability to watch it with a subtitle or in your own pace. And that's regarding that. You can enjoy the recording later on. Okay, we're going to have a nice place for the notes. I obviously suggest you guys to do the same. You don't have to. So, as you guys know, AvaTrade is a regulated company. We have 9 licenses worldwide. Our customer service, in case you'll need something, is right here at the bottom left. You can access on the chat or the WhatsApp or on the email. Okay, this is where customer service queries regarding your account, regarding details, whatever else you need in terms of customer service. Regarding trading, you have a senior account manager. You can ask for somebody to be assigned on your file once you've made a deposit and start moving. If you didn't receive anyone, you can go for the customer service and check by your eligibility to receive a senior account manager service. It doesn't cost you anything extra, and it's extremely, extremely useful. They can assist you with everything related to trading, depending on their level, in terms of strategy, plans, certain calculations, analysis up to a certain point, and so on and so on. All right, so the platform that we're looking at right now is called the Web Trader. We're going to expand about that in a minute, but let's also name the regular platforms that we have, which is MetaTrader 4 and MetaTrader 5, which I'm sure all of you guys are familiar with. We also have Ava Options and Ava Social. Now, those 3 are not really worth mentioning now. Okay, just to know that we have them. They're self-explanatory, and you can enjoy your journey learning them in your own time. Ava Social is related to us since this is by its basic webinar for beginners, and I'll explain to you why. So when I have a social, let's suppose that I'm a beginner, and as a beginner, I'm not always equipped with the right strategy, and I'm not sure entirely what I'm going to do and how I'm going to do. And what Ava Social allows you to do is to follow or copy another trader. How does that work? So if I'm copying somebody, I'm linking my account to somebody else's account, and whatever he does, I do the same, yeah, on my account. If I follow, and I can, of course, later on go to my personal area, I can check in the history what I did and how I did. Well, not me, the person that I'm copying, but I obviously get to see that in my sheets. And then I can review it, and I can understand how the strategy works. I can even take what he did and improve it in my own way, and maybe create my own strategy out of that. And it happens automatically, and that's wonderful. Okay, furthermore, I can also determine it's not, I cannot show you that because it's in the app, it's in Avasocial. But you can also modify the difference in terms of the size of your positions. So in a case that you're following somebody with 200 or 300,000 and your account is only 10,000, and he might take a much more considerable position that you want to be able to carry, then you can modify the difference and determine that your account will be using a different systematic load size. Okay. Again, I don't want to explain too much. There is no point. You can just download the app and see it by yourself. But I wanted to give you the idea of how it works. So this is copy, right? Copy, the person is trading. I'm doing it automatically. Very nice. Later on, I can review it in my sheets, and that's great. Follow happens the same way, just without the first part of the copying. Meaning, I'm going to get the same sheets that I would have had if I would copy someone, but no positions will be executed automatically. I can execute them if I want. I get them in a certain form of a message, and then I see, okay, the person that I'm following has done this and that. And I can do the same, or I can do similarly, or I can, again, use it for research and so many other things. Okay, but the idea is I can copy somebody, practically following and executing position automatically, or I can follow someone and then I'm going to get those notifications with the positions, but it's up to me to decide if to execute them or not. All right, that's regarding Avasocial. I don't really think we should delay on those too much. Okay, so let's carry on with the web trader. As I said before, I'm going to show you a couple of things here we have on the left. Let's fold it down. Okay, so like I said, this is the web trader. I would like to say, guys, that the web trader doesn't require you to install or download anything, right? To get to here, you can just regularly log in with your email and password. And you're supposed to see that. If you don't see that, you can click on the web trader and it will take you to here. Okay, that's the default screen. Sometimes it looks like that. Let me fold it down. Okay, with lists at the top. For your convenience, there is a toggle here which you can click and drag, or you can, like I did it with the arrows, you can expand or minimize just to have a bit clearer view. The chart is moving left, right, left, okay, only left and right if you click and drag on the chart. But to be able to pull it up or down, I first must enable it by clicking on the price and squeezing it down. And then I'm able to move it up and down. Now, guys, this function alone is making it extremely, extremely efficient. If you don't do that and you would like to examine higher levels of support and resistance, what you must do is to switch to a higher time frame, which we don't have, right? So what you can do is you can squeeze it down and then you can get higher levels. Okay. Now, this is regarding really the basics of the web trader. We're gonna go through that later on. But what I want to show you now is the signal section, okay, which can be found here to the left. You see there is, well, it just by pointing on it, it tells me that this is signals. I don't need to explain too much. But I want you guys to know that there are two ways to access the signals on the platform. The first one is obviously by going to the signal itself, go into the section. We have lists here. Okay, we can just pick one. Let's go with the Ripple. Okay, just expand it up. We're going to see the chart. We can do the same trick in here. We can match the levels if we would want it. Just fetching here a horizontal line, start placing them on the chart to confirm the levels. Okay, no problem. I can definitely do that. But I'm not going to because this will consume a lot of our time. I'm just going to have a look at here and think, okay, this seems to be like a buy. We have here a buy or a sell scenario. Again, this is an example, so it doesn't make a lot of difference. I just want you guys to see how it works. Okay, so the first thing, we got into the signals. We then clicked on the view signal, and now we're looking at a buy or a sell. Let's say a buy. Let's go with a buy. Okay, so what happens if I click on the buy? Okay, it's showing me here. It's showing me here. If I scroll down a bit, I get to see I have here a section with pending orders. Execute when price hits, take profit, or stop loss. How does that work exactly? What is take profit? What is stop loss? Okay. What happens when I click on buy? When I click on buy, automatically, if the signal is valid, and this one is valid, I'm also going to show you a one that is not valid, so you'll know the difference. Okay, but if it's valid, and I'm going to click here on buy, then I get pending orders already applied on my position, which I can execute right away. Now, I can modify those take profit and stop loss, but let's first understand what I do, right? So let's suppose that I want to take this position. My take profit is set to that. Okay, let's switch to daily. I will explain to you in a minute, guys, everything about the time frames, but for the time being, just bear with me so we can finish the introduction, then we can get down to business. But now I want you guys to have an idea of how it works. Okay, so we have two lines. We have the upper pink line, the down pink line. They both represent the same prices that are applied automatically with our signal. And it's showing us, okay, Danny, if Ripple is going to get to here, you'll be making 36. If it gets down, you'll be losing 24, and that's great. And I can modify, okay, if I would want to, and I can also change the lot size if I would want it. But in practice, if I want to use the signal as it is, it's super, super easy. Okay, now, why would I want to access the signals not from the signal section? Why would I want to do it from the outside, right? Now, the advantage looking at the section is obviously you get to see the production time and to choose which one was recently baked. Okay, so in here, I get to enjoy a linear order, which I can see the older, okay, and the newer. And then I get to see which one was recently made and which ones are, well, what is older. Now, you probably already understand by now that taking a signal that was manufactured around 6, 7, or 8 hours ago versus a signal that was just produced is completely different. How different? Because if I look at this signal as an example with Brent oil, and I'm going to click on the view signal as I did before, and then I'm going to expand the chart, and I'll see the validity here is daily, so no problem. I'm going to go to the time length, and I'm going to change the minutes candle onto the daily candle. And now each candle on my chart is 1 day. Now, it seems like this one has already reached a key level, right? What does that mean in terms of this signal? It means that the functions that I just showed you a minute ago, which is take profit and stop loss, are not marked. But Danny, what exactly take profit and stop loss are doing? Don't worry, guys. Now I'm going to show you. Let's click on the take profit. Let's click on the stop loss. Again, this is not a valid signal, but I'm just explaining you the idea of how take profit and stop loss works. So the next signal we're going to see, you'll understand how it works. Okay, so let's suppose we are looking at a dollar higher. and a dollar lower, just like that. That means this guy is going to be here, and that guy is going to be down here somewhere. Okay. And in this case, if it gets to the higher pink line, I'll be making $100. If it gets down to the pink line, I lose 112. Okay. And what take profit is doing is closing the position automatically with the profit, and stop loss close the position automatically with a loss. Okay. How is this useful in any way? Because those pending orders are going to be executed automatically. Therefore, I don't have to spend a single minute if I work with pending orders once I've launched the position. I can monitor and I can adjust it, and I can do further analysis and further risk money management and so on and so on. But when I launch it this way, I can step away and then I can check the results. And I can say, of course, it's not mandatory to use, but let's suppose that I decided to use this. I can go back to the computer and check what happened. And I don't have to do anything at the time that I'm waiting for my position to move, right? Again, I can, but I don't have to. In other words, what happens when I'm using a signal is, let's take that one as an example. Clicking on view signal, I can expand the chart, match the validity if I want to. Again, I don't have to if I don't want to. Okay, and then I can click on the scenario. Let's go with a sell scenario. Okay, and right away I have take profit. Again, closes the position automatically with a profit. Stop loss closes the position automatically with a loss. And it's showing me here, simulating me very nicely the possible profit and possible loss. I'm not getting into details how the signal works more than that, because there is just no point. You guys can really understand the concept and enjoy it by yourself. The one thing that I did want to say, I wanted to show you what the advantage is if I'm using it from the outside, right? They are provided by the Trading Central, by the way, not AirTrade. So what is the advantage looking at the signals from the outside? Okay, so if I go onto the signals, I get linear order and I get the to see the lists and to pick from the lists. But if I want to go through this hustle to get into the signal section and to search for my asset, let's suppose I have my own assets. I'm trading a certain instrument and I don't want to manually find it in the list. And still I want to know if it has a signal or not. Okay, so how do I check that? Again, the chart could look like that and you can fold it down, right? How do I check that? Let's suppose that I want to know if gold has a signal. Let's suppose that I'm more focused on gold and I don't really care about anything else, right? So what I'm going to do is I'm going to put down here gold, and then I'm going to pick it from the list, and then I can easily see if it has a signal, and it does. Okay, and then when I click it, there is a blue lightning icon here. When I click it, I can again expand the chart, do it the way that I want to. I also get to enjoy a full toolbar, not the way that we have here with the signals. Let's just show you that quickly, which is a bit more limited. I mean, it's still fine though, but it's not full as from the outside, right? So sometimes I'd want to do additional analysis, and I would want to use the whole system. Okay, we have here the signal, no problem. Perfect. This way I can check if my instrument has a signal or not. If I'm not checking in particular, but I'm more open-minded, I can do it on the signal section itself. Now, obviously, this support and resistance is what we call technical analysis based, and it's very useful. If I go down that line to in here in the news section, we also can hover onto that maybe, and then to get some more information about gold. Okay, on Tuesday, spot gold dropped this and that, and I can carry on and read it. And if I choose, I want to show you something that has more than, oh, there we go. You see, the pre-European market brief can show us that what is written here, it's not only relevant for one asset. If I click here on related instruments, it's going to show me that this might have an impact on crude oil, gold, Bitcoin, and the pound versus dollar. Yeah, again, it's self-explanatory. We're not going to waste any more time on that. If I go down the line, we have discovery. If I click it, nothing happens, right? But if I go onto something specific, like market buzz, as an example, then it's going to show me, I'm going to be patient with that. It's going to show me that things that are more popular. As an example, Apple, Tesla, Microsoft, and NVIDIA. If I click on NVIDIA, it's going to show me, going to give it a bit of time. Product release, it's showing me earning announced, it's showing me the rating raised. It can also show other values. Okay, but those are the most discussed topics. If I look at other parameters here, it can also assist me with analysis. What else? Here I have even more news if I want to, maybe some articles that it was mentioned through, and so on and so on. Just be careful which article you're reading, if it's official or it's somebody's opinion. So you want, so you'll be able to take advantage of the fundamentals. The next thing that I'm going to show you, and it will be the last for our introduction part, and then we're going to move to the second segment, to the practical part, is our economic calendar. What I'm going to do first is to reset the settings, of course. We don't have anything marked, and that's wonderful. Okay, so this is that by default. Let's suppose again that I'm not really interested in all of that, and I want to focus only on news related to the yen. Okay, and this is what we had yesterday. See, this is sorry, this is from today. Yeah, we are marked on today. Let's suppose that I want to see the upcoming 2 weeks. I want to see what events related to the Japanese yen in the next 2 weeks. So I clicked here. Let me show it to you again. Okay, it was marked here. I clicked it once, then I clicked it again. Oh, sorry. There you go. And it's showing me now all the events that are basically upcoming events, okay, by dates here. And I can scroll down, and keep reading by the dates. And I can also add it onto my calendar. I click here and then click on Google. If I'm using Google, if Outlook, so Outlook, okay. And what else I can do with the economic calendar? Let's suppose that I don't want to follow the low and I don't want to follow the medium. I'm more into the high impact event only, let's suppose, okay? So we have few segments in here. We have importance, actual forecast, and previous. We're going to speak about it in a minute. And the importance is something that I can filter. Just going to go here onto the high. Okay, and then we're going to see if I clicked on the high, it's only showing me high impact events. And I don't have to focus on the low and medium. Okay, could be good. Maybe if I want to also focus on maybe only on the low, okay, I can add another. Let's suppose I want to compare it with a dollar. So if I click here on the flag, it's going to add the dollar events as well. Okay, I can get rid of everything by clicking on all countries, and then it marks everything, and then I can reset it by clicking on it again. I can also reset my choice by clicking on the reset button, and I can reset the date by clicking on the date. In here, what is presented is this is the previous result of an event. This is what we anticipate it will happen. And when it's kind of grayish, let me show you something that is not like that. You see, when an event doesn't have the actual, well, those don't have the forecast as well. The point here is when you see the actual, it's something that has already passed. So don't get confused by that. Obviously, if something hasn't happened, it's not going to show you the actual. It's only going to show you the forecast and previous, right? Okay. So as an example, let's click just one last example so you guys will see the difference. You see in here we don't have any actual. We don't have any actual. Okay, those events are yet to come. Yeah, I think it's enough with the first part. Let's get down to business. As we say, let's click on the AV trade. Okay, now I can finally begin the second segment. Okay, let's fold it down, have some inspiration from the categories. Let's go to commodities and let's go with agriculture. Let's see what is there. Okay, coffee. What else we have here? Let's go with wheat, how wheat is looking like. I mean, wheat is pretty basic commodity. We make bread out of that. And the chart looks pretty good. Let's change to something a bit closer look. Let's go with days. Yeah, doesn't look too bad. Let's check weeks as well. Okay. Yeah, looks pretty nice. Okay, maybe we'll switch with, stay with days for now. Okay, now again, let's go back to the point when we are beginners and we have absolutely no idea what's happening here. We just picked wheat because let's suppose that I like bread, okay, as an example. And wheat seems interesting. Of course, there are many other reasons why the chart looks pretty amazing to me, but we're not going to do analysis until we'll understand the basics here. Okay, so to begin with, we'll go through the toolbar to understand how to allow certain things here to work, and then we get information. Okay, so we already went through the search bar. I can just type in something and then click it from the list to my relevancy. Okay. The other way is obviously manually from outside, as we saw from the lists. Here we have the time frames. We have a minute segment, hours, days, weeks, and months. Here we have the shape of the chart. We can make it look just like a line, but maybe we'll miss certain things by doing that because the candles are a bit more informative in terms of showing you candle shape and some other things. So this, which could be a great sign for reversal, is not going to appear looking at the line. You see, it doesn't exist here. Let me get rid of it for the time being and go back to the candles. If I keep going to the right, I can finally get, right now, if I'm pointing on the candles, nothing happens, right? But if I click on the crosshair and I change it to no crosshair to crosshair, then I get information from the candles and I can see the open, high, low, and low. And I can see here the dates. I can fold it if it bothers me. In here, I can split the chart to two assets. Then perhaps if I want to examine different time frames and make a quick comparison between, let's say, weeks and days. So in here, I have the weeks. In here, oh, sorry, this one is days. Let's switch to weeks. Okay, and then I can compare a little bit how it looks like. Okay, I don't want to confuse you. Let's go back and keep it on days. All right, I can do different things with the layout, or not really. It's not really relevant for us now. Here we can add an indicator, and that's fabulous. In here, all the lines that we placed, support and resistance, other assistants that can help you get a clearer picture when doing analysis. Okay. And now, when we saw the toolbar, we can perhaps do something nice. Okay, so to begin working, the first thing that I would like to do, you see people keep raising their hands. Guys, you don't have to use the hand raise function because you have a question section that you can use freely. I'm just not going to notice because I'm lecturing on the other screen, so I'm not going to see if somebody raised their hands or not. You can just type in the question and I will answer it accordingly. Okay. How do we get this thing to work? The first thing is to click sell or buy. Let's click buy, just as an example. And now we have the opportunity to open a position. Okay, we can choose pending orders. We already know the take profit closes the position automatically with the profit. Stop loss closes it with a loss. Let's mark them for now. The numbers are irrelevant because we're adjusting it anyway. We have that thing here, execute when price hits, right? Probably another pending order. Now, what it does is it allows you to choose a price that instead of buying it now, I can actually say, it doesn't really matter the reason now because it's analysis, but let's suppose that for a certain reason, I don't want to buy now, I want to buy it 540, which is in here. Okay, and that's my destined entry. Okay, now with that in mind, I understand execute when price hits will launch this position automatically at 540. And it's important to understand that the simulation done here is based on that. If I wouldn't do that, just like that, it's going to show me the figures based on the current price. If I do it this way, then it's going to show me the results based on that. Okay? Now, if let's get rid of it. Now, if for instance, I want to, let's bring it back as well. Okay. Now it's supposed to give me the suggestion that I had before. Perfect. Okay, again, we're gonna adjust it anyway. It's just ignore what we have here and here. Actually, let's disable it. We'll enable it. I don't want it to confuse anyone. All right, so with wheat, we think that wheat possibly can go up. We understand that there is a certain momentum here that perhaps we would like it to take advantage, as this will be our support line. We don't want it to get messy, so we're going to cut the edges this way. This is not mandatory, guys. It's important to know that the preparations that I'm making are personal, and it's not mandatory to know how to do that. Just easier for me to show it to you visibly what I'm doing with my eyes. Okay, let's suppose that now I think wheat is going to go up, but I have a problem because just up can easily change. Let me just show you. Okay, how up and down keep on changing. And we are now not looking at days, we're looking at hours. So this what, if I take a buy now and it goes down, I'll have a loss. And that's not wise. What I want to do, look, it happened here as well. Okay, and it happened here as well. And it just keeps happening because this is the nature of the business. And with this understanding, just to buy or sell, will it suffice for me to take a position? Just thinking wheat heading up, is that enough to open a buy? What do you guys think? Let's suppose that I think wheat is heading up, but I have no specific indication until what price. I don't have any indication at what momentum. I don't have any indication of support and resistance. I just take a plain raw buy. Is that a wise decision or something else should be done? What do you think? If you buy and it goes up, yes. Thank you, Alice. Just to share what Alice wrote here, if you buy and it goes up, you make a profit. And that's entirely correct. If I buy and it goes up, I'll make a profit. But what if I buy and it goes up and then it turns down? Like in here, oh, sorry, that's vice versa. In here, okay, what happens if I buy and it goes down? Then I lose, right? Looking at the trend, I don't believe it's a good idea. Okay, that's completely your right to think this way. But right now, if I'm looking at a buy, it's not going to be enough because I understand that it might turn around. With this understanding, I need not only to capture a buy trend, but I need to buy knowing where I'm aiming for. So which one of those lines is more realistic? The yellow line or the turquoise kind of a bluish line? When I'm buying, which one is more realistic? This one or that one? What do you guys think? Why does it make any difference, Danny? Just to buy, and if it gets to one of the lines, you'll be making profits. Well, yes, but until it gets to those lines, and if it gets to those lines, if it's a completely different thing. You agree with me that if it will take 1 year, again, I exaggerate, of course, but if it gets 1 year to get to here, okay, and I'd be making, let's say, $5. So how can I put it in nice words? It's not really efficient, right? It's not really efficient to hold a position for a whole year until it gets to here to make $5. Not really good. What about here? Okay, maybe here it's half away, so maybe 6 months. Okay, but enough with the guessing. Of course, this doesn't help us in any way, but it does give us the idea that we do need to aim somewhere. But where is this somewhere, and how I can know which price is realistic? And again, why do I have to aim realistically? Why not just to look at here, think this is a good, because if I want to use a take profit and stop loss, if I define something hypothetical like 590 to the take profit, and I can make 640, and that's great. But the last time that it's been there was in July, which is a month ago. To make 600 in a month, it's not bad. But what if I want to make more? So how do we adjust it? All right, so there are a few questions that I've asked. Okay, what price is realistic and how much we can gain, and how frequent it to get to one of those levels. So to straighten things up, I would like to write down a few things: target time, movements, and units. And with this, just by filling down those fields, I should have a better idea what I'm facing. So now it seems like wheat, like I said, is an uptrend. Again, we cannot know this for sure, but we can estimate it will carry on going up, understanding something called resistance line. Actually, guys, I have to explain about support and resistance, otherwise this wouldn't make any sense. So support and resistance can be easily found in almost any time frame, okay? And they are actually edge points on the chart, okay? And I can mark those edge points. Either right now I'm using Fibonacci. It doesn't really, you know what, let me get rid of it. I don't want to confuse anyone and it might be too advanced. But if I'm looking at certain points, okay, which are peak points on the chart, I can see what is support and resistance. So this is the highest. Of course, I have higher here. It's irrelevant. It's much higher. But I also have another one here. I have another one here. Okay, I have a little, maybe lower than that right here. Okay, maybe it's less relevant. There are many, many levels. Support and resistance, there are many levels. Okay, we're not going to capture them all. It's going to take us forever, and we don't need that. But the point here is when I'm putting those lines, I can achieve some kind of idea. Where am I heading and what are the proportions that I should be careful if it can possibly turn around? Okay, we acknowledge support and resistance like certain lines that if it passes those lines, something fundamental possibly have occurred. Oh, sorry. And there are many ways to find them. Right now, we're going to focus on 557, sorry, 555 and a half. And this is the next resistance line, and I'm looking at it like my, as in my target price. Target price for a profit since we are with a buy. Just to establish something very simple, guys, because this is a webinar for beginners after all. Buy means that when I'm buying something, I want the value of my something to increase. Therefore, if I buy at 548, I want it to be 549 or higher than that, meaning that as long as it's higher than the current area, the current price, and I've covered the spread, that means that I'll be making profits. If I took a buy and it goes down, that means that I will have losses. Simple, right? All right. Now, let's suppose that my target, and if I don't have a target, I'll never know when to close the position, right? I can just say I'll close it here. But, okay, how much will you make? 600. I'm not sure that that's the number that I want. Let's suppose that I aim for $1,000 and I aim to make it in 2 weeks. Actually, let's make it 1 week. And right now I'm looking at what kind of movement. Danny, how could you possibly know what kind of movement wheat will make? Well, that's simple. One of the things that I can do is I can look at the previous week. Oh, let's switch to weeks. Okay. And when switching to weeks, oh, let me correct. I think the rectangle looks a bit different. Let's do it this way. And when we switch to weeks, it would make more sense. Perfect. Okay. And now we see, by the way, that it's already in the range. Yeah. We don't need to think too much. We see that if those are weekly candles, we have changed from daily to weekly candles. Okay, just to clarify, day to weekly candles. Every candle here is a week. And what I can simply do is I can point on the previous week and I can say, okay, I have the numbers here, right, at the top left. What I can simply say is, okay, the open, close, high, and lows. We're going to take those two edges. One of them represent the green area, which is the open and the close, and it represents the beginning and the end price of the market. And we have the high and the low, which represent the whole length. What do I mean by the whole length? You see that every candle is made out of two segments. We have the colored area, and we have that tiny tail in here, a bigger tail in here, and we can include them as high and low. Between, we have the open and the close. So what I can do to have some measurement is simply put down those numbers and subtract in between. Therefore, let's look at the open here, 522.25. Close is 532.5. We also have the high here, which is 540 flat. And we have the low, which is 514.5. Now, quickly, if I'll subtract the differences, as we said, okay, we have an idea what to expect. But the problem with this method, which is a bit dying as prehistoric, is that one candle is not an average. One candle is an individual. Therefore, to have a more precise calculation, I have to include more intervals. Now, this, because I'm experienced, took me maybe 20 seconds. But to jot down the numbers and to include those differences and to cut down an average and to compare it with a chart, it takes time. We're not going to obviously do that. What we're going to do is we're going to go onto the indicators and click it in here. And then we're going to simply look for AVE for average true range. And then we're going to click and drag it to the right. And now it allows me to define, Danny, how many candles you wanted to analyze? How many candles? Let me have a look at the chart. Okay, let's see. 1, 2, 3, 4, 5, 6 is approximately when it started creating this new area-ish. And let's make it 6. Why not? We have here simple Wheeler's weight and exponential. We're not going to explain too much into depths, but I think that Wheeler is more precise considering the difference in the averages, including the length that we choose. Oh, that's 16. Let's make it 6. And then we're going to change also maybe the color, so I won't get confused because I'm half blind. Okay, and click save. Perfect. And now, instead of jotting the numbers down and doing calculations and averages, look how nicely we have here 35,171. Let's put it down here. ATR equals 35,171. Okay, and let's work with that. Let's simulate if the take profit would have been $35 higher, what price it would have been. So we're going to go 547, which are current price, plus 35,171, and that's that. Let's paste it down here. And okay, on average it can get to here. Let's suppose I want to secure myself a bit, and 35 seems a bit ambitious. It's a bit ambitious, to my opinion. And the reason is, I think that last week and the week before are a bit smaller than the rest of the bunch. Therefore, I think 35 might be ambitious, and I'm going to make it 20 instead. Precautious, okay? Now, with anticipating $20 per unit, understanding if I hypothetically would just get 1 unit and it would go to the 20 higher, let's see what 20 higher is, 567, that's where that is in here, midway. Let's make it green as well. Great. And let's make it 567. Well, I don't have to be a genius to understand that when I acquire 1 unit and it travels across $20, I'm going to make $20. If I would do this with 10, I would make 200. And if I would do this with 100, I will be making, who knows? quick checking if everybody is still alive. Guys, look at the difference. When I have 1 and it goes $20 higher, I make 20. If I make it 10, I make 200. What would have been the amount if I would have had 100? Who knows? Who knows, guys? 5 more seconds. 2,000. Perfect. Angus, very nice. You're the first one to answer. Kimberly, very nice, very nice. You guys are great. Let's make it 100. That's correct. 2,000. Now, let's keep it as 1, and let's understand what's the necessary units for us to get to 1,000. Therefore, what I would like to do is I would like to divide my let me first write it down. Target divided by movements equals units. Therefore, 1,000 divided by 20 equals, who knows? Again, let's see who's fast. 1,000 divided by 20, guys. Who can tell me the answer? Correct again. Very nice, Kimberly. So we have 50. Now let's put that to the test and see how our number reacts. Let's make it 50 precise. Well, not precise, but we can play with the figures and make it precise. But 1,000 is close. 1,020 is close enough to 1,000, and I'm happy with that. Let's suppose we're going to take the same ratio of 20, and we're going to subtract it from the current price as our simulator for stop loss, because this stops the position automatically with a loss. And this is a nice ability that I would like to have. Otherwise, if I don't use a stop loss, and God forbid, it gets to, let's say, here somewhere, okay, in more than a week. Let's see what could have happened. Ooh, that's not nice. Okay, third of my account can go bye-bye. Okay, so I'm gonna use a stop loss, but I'm just gonna put it much, much higher. And instead of 547, let's subtract 547 minus 20. That means 527. Oh, sorry, 527. And then I can lose as much as I gave. But let's suppose that I'm not happy with, let's put 50 here. Let's suppose that I'm not happy with a ratio of 1-to-1. I don't want to lose and gain the same amount. It doesn't make any sense, right? Let's suppose I want to cut it by half as an example. How do I adjust my potential loss to potential loss from 10 to 500 and keep my profit the same? Who knows the answer for that, guys? What must I modify to keep my profit ratio the same and the stop loss make it 500 instead? Who knows the solution? Come on, let's see. Okay, Frank, this is not your first time, so let's wait with the audience. Okay, Frank, you're right. We're going to change the lot size, but if we change the lot size, it will have an impact on the profit, and we don't want that. So what otherwise can I do to keep my profit the same and the stop? Never mind. I can lose this. I can use the stop loss, right? I can simply move the stop loss higher, since I've already given you the answer, guys. And instead of 527, we'll look at 537, which is half of the length that we took, which makes perfect sense. And now I can potentially lose 500 instead of 1,000. All right, with this in mind, let's go through that as well. Let's go through that as well, guys, to understand how the leverage works. So we have something called price per unit, okay, which is 547. We have number of units, okay, which is 50. And then we have price per unit times units equals, sorry, units amount equals value. In other words, 547 times 50 is what? 27. Oh, Danny, how did you do it so fast? Guys, it's already written here, okay? But still, let's, for the sake of the example, sorry. Okay, you don't need to know that by heart because it's written here, and that's great. Value. However, I don't need $27,000 in my account to open the position because I have leverage. And what leverage does is it multiplies buying and selling ability which in this case, it's 1 to 10. Wait, so Danny, if we don't need 27,000, how much do we need? Well, because I multiplied times 10, why don't I just divide what I have here by 10, which is actually my margin impact? Yeah, I really don't need a calculator for that, but why not? See, if I divide it by 10, it's exactly written here. Therefore, value divided by leverage equals margin impact. Okay, and margin impact equals margin requirement, also known as necessary amount to open a position. All right, guys, I do understand that because we have done this in half an hour, it might be tough to understand on the spot, and you might need to practice. But I'll remind you again that this webinar is recorded, and we're doing it casually on Wednesday. You can join us again, and you can review it again. But the biggest advantage, creating a system made out of the TTMU, the Target Time Movements and Unit System, the biggest advantage is you can just reuse this exact composition with one change, which is the movement. You decide your target, you decide the time length, and you can measure the necessary units based on the movements using this equation. Okay? It makes it simple and very time efficient. Of course, it's one approach. Everybody has their own approach, and to be honest, as long as you're making money, it's great. But this is a nice way to compose things. Guys, unfortunately, we are out of time. I appreciate everybody who joined us today. I'm sorry we didn't have time for analysis, but I wouldn't have a point teaching analysis before we would have known that. Therefore, I wish you all best of luck. You are welcome to join us tomorrow with a live Q&A. And until then, I wish you all a fruitful week and have a good day.